ETFs. He's an extremely busy man. He's cash rich and would love to put some of that spare money into trading, but he just doesn't have the time. He knows he's going to get frustrated. He wants somebody, a professional, to trade for him. He's in luck though. The Stop Hunter has the perfect solution for him. It's called IGOX. It's a fully automated copy trading service built by the Stop Hunter to give you access to global markets 24/7 and to potentially access the Stop Hunter's higher trading returns. Learn more and get signed up by visiting our website www.igox.co.uk. Hello everybody, welcome to my regular weekly look at the S&P 500. A lot changes in a week, and as you've seen already on the channel, we've added some new content in for you already this morning. We've got some more as well tomorrow, so I hope you can join me there. We've got the FTSE 100, one of my favorite day trading markets to look at, and we've got Bitcoin on Wednesday, plus the usual regulars. Now, S&P 500, what have we got to look forward to this week? Well, no real earnings out to shift things about. We're out of that season at the moment. I would say it's going to be, like most of the other markets, interest rates and inflation. We've got, like I mentioned in the earlier shows, 4 big ones this week. We've got the US, UK, Japan, Switzerland, all reporting. Plus, we've got some inflation numbers around that as well. So I think the market's going to be tied into those events, and that's going to push the market the way it sees and translates that information. But I still see it as at least hawkish for until mid 2024 at the moment, so factor that into your trading. But as you know, I love the technicals, and we are going to focus in on them now. So let's have a look where we're at currently with the S&P this morning. And you can see, if we take it back to Friday, we can see that sell off towards the end of the day. And then this morning, it sort of started the same sort of way. A bit negative, I'm afraid. Down to about, where are we now? 490, somewhere around there at the moment. Bit of a sell-off there. And the indicator's also giving us a short signal in there. So not a great start to the week if you're long. Flat to weak, bearish. So let's focus in on some more data. And I'm going to have a look at my sort of spider's web of major global stock market performance indexes over the year. Where are we at the moment? Well, we're looking at the S&P here, and we're smack bang in the middle there in terms of performance, up just over 15, well, nearly 16% since the beginning of the year. Still way behind the MOEX 10, that's Russian, and the Nasdaq up nearly 38.33%, and then we've got the Nikkei 225 up 28.5%. So still not bad performance from the S&P 500, and compared to some of those other big markets, slap bang in the middle there. So focusing more on the S&P, we're going to start with seasonality. Anything going on this time of the year? Not really, maybe a little bit bearish, weak bearish down, say, to October. And then we have, like I keep mentioning, one of my favorite times of the year for stock markets and stock market indexes, this sort of November through December, January run. The December period, often called the Santa Rally, and we will look into that more at the time or just before, so we can tee ourselves up for it. But like I say, bullish through that period. But at the moment, I would call it weak bearish. Now, commitment of traders. Now, we'd be expecting these guys to be following the price, and they pretty much well are. So you can see there. What we got at the moment, we've got, just drag that down a bit. We've got the actually increasing their long positions from last Friday, so getting a bit longer there. And what about the actual price? Yeah, that's been going up just with sort of a bit of indecision bar there, and the down day so far today on the Heikin Ashi up the top there. So call it a weakish, neutral, bullish type situation there. And then this to me is the key indicator that we want to look at when making these sort of assessments, the VIX, and I've gone on about it. I've done a course all on this as well. If you're interested, you'll find that on the YouTube channel. But the VIX, we look for the inverse to the price action to lead us into a decision on where we think the S&P is going next. And as you can see, this is a daily VIX there. It's going up. It's gone into the cloud. It's going through the other side. So that is a bearish sign. And you see the price just coming off into the cloud. Wait for maybe that indicator to turn before going in. But at the moment, it's looking bearish. And we can, again, focus in on much shorter time periods. And this, it works exactly the same way. Let's just get rid of that. Undo that. Just make it visible to you. And just to see where the VIX is. And this is an hourly chart. And you can see exactly what's been happening in the shorter term, and see that increase up the top there. The volatility's gone up from just over 13 to 14.5, bit more than that. And as you can see, as that went up, the price came down, stabilized, and then it's gone down again as that's just starting to pick up there. So the VIX is a very useful tool for your trading of the S&P, and at the moment it's telling you things are looking a bit more bearish. And in terms of some other indicators, we got the S&P 500 stocks above the 50-day moving average, just about holding, I'd say, bullish there, maybe weak bullish. And then the same but above the 200-day. Again, let's call that maybe a bottoming consolidation, looking to be a bit more bullish, but still within this range here. So nothing too exciting. Same with the 50, actually, that range there. So neutral, maybe weak bullish, and then down the bottom, it's the 52-week highs on the New York Stock Exchange. You'd probably call that maybe a bit more weak bearish. So it's not really exciting underlying data here, really, in terms of commitment of traders, seasonality, and these other basic statistics. The other big one for me is the VIX, giving us a warning of maybe more bearishness to come. Longer term look, weekly chart here, drawn on the 2 standard deviation regression band, just to show you where we fit into the bigger picture. And you can see there, slap bang in the middle. It's a 50-50 play to the up or the down at the moment. Picked on that big down sell-off March 2020. And in terms of indicators, DMI still giving us a bullish reading there. The awesome oscillator is short, so let's go neutral with that observation. Trading above its longer term moving average there. Still holding. It did bounce. You can see that bounce, and it hovered around and bounced on up. So we get this nice pattern. It's in there. So we have got a lot of upside. The top of that band is 5,300. The bottom, 3,700, 3,750. Fibonacci wise, got support 4,250, 3,800, and then call it 3,500 to the upsides. First of all, 4,820, 25, around about there. Then if it can break onto those highs, the next big number there, 5,500, 5,550. And in terms of short-term price action, got the hourly 4-line break chart here. What's it telling us? Well, it's actually giving us a bullish setup in play at the moment. Where would we get in? We're getting somewhere around about here. A bit more conservatively about here. What are those numbers? 4,500, 4,507, we'll call it 4,501 and 4,507 for potential upside move. Again, you can change the time frames to give you different decisions, actions, ideas around the price. And then into the Renko charts, longer term look. What have we got? $20 block size here. Down the bottom, stochastic giving us a sell. The trend's still bullish. We got this is a modified DMI that I use. We've got the green, the bullish above the DI plus above the DI minus, so that's looking bullish. So essentially neutral there at the moment. In terms of the price action, we can see slightly higher highs going up there and higher lows in that channel. So maybe we've got a bit of a pullback to here if you're more optimistic before it pulls on through. If you're more bearish, we got this point of control, a lot of volume around 4,100. You can see all through there over that time period. This is going back to just before the start of 2023. So we could see these numbers, the 4,300s, 4,200s, all nice round psychological numbers. 4,100s as the downside buffer support zones, and then upwise 4,600, and then 4,840, 4,850, and finally the short-term Renko. What have we got? We got the stochastics at the bottom bearish. We got this looking like it's coming for a cross here to turn more bearish in the short term. You can see that pullback in the price from those highs around 4,566. We've got that trend going in there. So let's see what it does. Does it break it and take it down to the 38.2% Fibonacci line, which is 4,438? Not so much volume there. Could easily slip down to 4,400 and then 4,350 to the downside. And then upwise, getting through that point of control will be the first issue, 4,520 odd, and then 4,566, 4,622, 4,650 /4,651 short-term upside targets. So now, if we're summarizing that lot, it's a sort of mixed bag, which makes it quite tricky. There's not big sideways ranges in there to be trading either. The big takeaway for me is the VIX. It's looking more bearish. And the other takeaway, which you mentioned right at the start, the fundamentals around all those interest rate decisions, maybe it could be a sluggish week ahead for the S&P as it waits and sees how the week plays out before making its mind up to push on either bullish or bearish around, like say, those decisions. Market, is pricing in bearishness through that VIX tool. So, watch it very carefully. I suppose urge caution on your trading on the S&P 500 this week. Stick to your trading plan and rules. And like I say, watch those numbers very carefully. So with that, thanks for watching. Like I said, I've got more tomorrow. FTSE at 9:30 UK time, GMT that is. Then 11:30, start of a double energy blast. We got WTI 11:30, and then 1 o'clock nat gas. So with that, hope to see you there. Thanks for watching, and I'll speak to you again soon.